busy week ahead, and looking forward to trading with everybody. So let's kick things off with first things first. You understand there's risk in trading. Please trade capital only. Do not trade with money you can't afford to lose. Whether trading stocks, options, futures, forex, cryptos, you know the deal. Take a moment to read this disclaimer. If you're following me out there on social media, make sure you're following the real me. I had a good one this weekend. I think it's real Chris Pulver. Was actually using my fake shoutouts to claim to be me, even though the name is completely off. So again, I will say this. If you're following me on social media, make sure you're following me. YouTube.com/Chris Pulver or real Chris Pulver. No underscores, no numbers, no double letters. I don't solicit. I don't DM anybody, right? You contact me, I'll reply, but I don't initiate. So please make sure you report and flag and get all those scammers off social media. All right, about Real Chris Pulver on Facebook, Instagram, Twitter. That's TikTok and Twitch as well. But follow me on the YouTube channel, youtube.com/Chris Pulver. Let's get into the charts. Let's get my face in here, hey everybody, and this guy and this guy. All right. So here we are year to date. We've had a lot of consolidation in the stock market. This is the NASDAQ, still down 26.8% for the year. S&P still down 18.95% for the year. Dow still down 13.9% for the year. 10-year was up as high as 3.4, 3.5, has drifted back down towards 2.9. I'm very interested to see how things were shaken up last week with the CPI data. We'll take a look at that Fed Watch tool. We've had Fed speakers kind of go on the dovish tone to say, hey, look, we know the market expects with the headline inflation that we're going to raise rates aggressively. They want to do 75 basis points at the end of the month, which is July 27th. The market is trying to price it in either way. It still puts the Fed around 3.5% by the end of the year, possibly 3.75. So we'll see if the market has to adjust to price that in. Bitcoin is actually at 21. It's like 22,000 right now. I looked at it this morning. We're up about 10, 15% off the lows. Oil is down as low as $93, but back up and kind of hanging around that $100 level. So needless to say, as we're in the bulk of summer trading through now until August, this is a crazy week. We're going to have ECB press conference and rate decision on Thursday. This is the ECB's chance to get off a zero. The deposit rate's been in negative territory for the last probably 10 years. The official cash rate for the ECB, the European Central Bank, has been zero, and that hasn't changed. So they might be the most reluctant central bank to raise interest rates, but they also have a energy crisis and conflict going right in Eastern Europe, and they have some sovereign debt issues with Italy and Spain and Portugal and Greece. And again, raising rates is probably necessary, but it may not be the only saving grace. So, of course, this is Thursday, and this will also be the precursor to the Fed next week on the 27th. So let's go to that CME watch tool really quickly right here, and I'll refresh this for July. So right now, it looks like the market has repriced in the 75 basis points hike. And last week, this was all over the place. This was literally 80-20. So the 75 basis points hike was 80% probability. And then I think when the Wednesday CPI data came out, it was completely flipped, and it was like 60-40 in favor of a 1% hike. The Fed speakers came in, tried to talk it down a little bit. They're still talking about 75 basis points, most likely in July and possibly again in September. One thing that is very noticeable, we do have gas prices going lower. For the U.S., gas prices at the pump are going lower. We do have core inflation, which, granted, and it's a weird way to measure it, excludes food and energy prices, but it has been down for 3 straight months. So the argument is being made that core inflation is improving. Headline inflation, because of food and energy costs, stays high, and we're still at 40-plus year highs. We're now 9.1% year over year. So it's grabbing all the headlines, grabbing all the attention, but it also could be a big misdirection for what the Fed is actually wanting. They may like to see that core inflation is coming down. They're going to stick to this rate hike cycle for now and possibly get into this 2 to 3% range. But if they can back off by the end of the year, I still think, just historically speaking, with probabilities of why this market would fight back, why would the S&P 500, why would the NASDAQ, why would the Dow be able to fight back and not finish at these lows? The NASDAQ was down at the most 33, 34%. The S&P was down 23, 24%. if we fight back and finish at minus 12, at minus 10, if we get back to break even and finish flat for the year. I do think the market has that in that with between China, U.S., and money that has not been applied to these markets. M2 is out there at all-time highs, and I think we have plenty of money to go back to work. And I'm sure that at this point, there's enough uncertainty that if the market had a bit more clarity, it'd be willing to jump in and toss some money into the markets. So that is what I will be watching carefully. Okay, so let me see who's in the house today. Just going to get logged in. Good, good, good. All right, Herbert's here, Chris is here, Joe is here, Donna's here, Sterling, what's happening? Gary, good morning. Wayne, good morning. Marilyn, Don, good morning. Daniel, what's happening? Steve, good morning. All right, let's go. Okay, so there's your Fed. Here's our news for the week. Like I mentioned, the ECB, we have Bank of England speech, RBA speech, CPI out of the UK, CPI out of Canada. Big price action difference last week. Canada surprised with a 1% increase, and we saw a lot of initial weakness in the CAD because of that rate decision. I'm not sure if the press conference kind of switched that. We do have a Bank of Japan outlook this week on Wednesday to Thursday. So interesting timing to see what's going to happen with BOJ. Are they going to stick to the narrative and just squash inflation by keeping 50+% Japanese government bonds purchased in-house? Or are they going to flinch and possibly get some aggressive repricing on the Nikkei 225, possibly in the Japanese yen? Dollar yen is still fairly resilient, hanging at 137, 138, and we'll see if that 140 handle matters. ECB, first time in a decade looking to raise rates. This is a 25 basis points hike expected, and we'll see if they come out with an as expected rate hike or a surprise rate hike. If it was 50 basis points, I think that'd be a good surprise. We haven't really seen any strength priced in the euro, mainly because, number one, this hasn't been a guaranteed thing they're going to raise rates, and number two, because there's still a conflict going on and an energy crisis, and Germany is feeling the heat. You've got countries that are potentially negotiating with the IMF and the ECB to try not to default. So not a good situation in Europe. But again, Forex market, trading-wise, could have some aggressive repricing as things get a little bit crowded at times. Okay, what's up, Ray? How are you? And then Friday, we have PMI numbers coming out of the Eurozone as well. So UK, Eurozone, and that is retail sales for UK, PMI out of France, Germany, and the Eurozone, as well as the UK. And then we have flash services PMI of the US and retail sales out of Canada. But big one that I'm watching, CPI news for the UK and Canada. Watching the Japanese yen from Wednesday to Thursday. All eyes on the ECB on Thursday this week. PMI numbers out of the Eurozone. So I really want to pay attention to Euro crosses. Euro Aussie, Euro CAD, Euro Swiss, Euro Pound, Yen, New Zealand dollar. Watching to see if that Euro dollar parity holds. We can get some support. There's really nice levels to come back and balance just a little bit at 103.50 to 104. If we crash again through parity and just go lower, then I'm essentially just going to wait and see where this trend line breaks and where some bottoms are at. Okay, so that is that. Got through a pretty busy week in trading stocks and options. So we did take some losses last week. I'll just put a highlight in here. So it took some losses on the following credit spreads, lowered the costs on the following stocks, added some new trades, also have a lot of these losses repaired out for future months. So hopefully what was added up in losses this week, which shouldn't be a lot of these are one contract losses. Let me see here. I didn't add this up last week in class. So 250, 50, 235, 50, plus 50, 50, 50, 0.25, 0.5, 0.5. So $8 in credit last week was what $8 of losses, I should say. Roughly most of these are one contract each, but I'm trying to think. Delta I can go in and repair this week. Hopefully get it called away for a few hundred bucks. And I'm trying to think anything else that I have covered calls on. Lower costs on all these. Delta's one I'm looking to lose here in the next little bit. Credit spreads have been pushed out into August, into September. I'm starting to build up a lot more expirations in October, December, and January of late this year, obviously October, December, and then January, even into March of next year, building out some trades and credit spreads on stocks just to give the market time that it needs. If I go into my charts here, we take a look at the E-mini futures feed for S&P. Okay, we have a green candle on the day, and we're still stuck between a couple of levels, right? So this high has not been taken out. This low has not been taken out. We've now spent this is 4 weeks now. Well, this will be the 4th week, but we've spent 3 weeks after this high was created. We've spent 3 weeks going sideways. So we're still in a range, which makes sense for summer trading. Now, I need to figure out, and this is what we'll do in Equities on Demand, we'll figure it out in Flex. Are we going to flush lower before we go higher, or are we going to fake higher and then possibly have one more push to the downside? I don't really see a lot of positivity coming out of earnings, although last week didn't seem terrible. Some banks were. It was a big financial week as far as earnings this next go around for like it's Q3 now, but they're reporting Q2 earnings, and financials did okay. They weren't as great. It wasn't unanimous, but some banks beat on top and bottom expectations, and there was some surprise upticks, even some tech stocks. Crypto had a decent weekend, which is surprising because it's been flat. So here's Bitcoin for a moment. But Bitcoin trading at 22.2. I want to see if this translates into an uptick in Coinbase, which is now pre-market $4 higher. Ethereum's had a decent weekend. I saw it was at 1400. So 1481 starting to get back up into these pocket levels. So that's a good little uptick in Bitcoin and Ethereum. So we'll be watching the structure pretty carefully. But again, for the S&P 500, are we going to break out of this range? If we do, let's see where it goes. Now, one thing that's going to have to happen is we're going to have to break out of this range and close above this high. If we just test this high, I would like to see, I'm probably going to put a little bit more timeline on this. I want to see a weekly candle close above this high, not just a daily candle. I think a daily candle could break and then fail the next day. So if we have a weekly close above this, then I think we actually put in a bit more of a bottom. One thing that has been a bit of a turnaround that's been a little disappointing is Chinese tech stocks. So KWeb is trading at 29.96, which pre-market is up a little bit. I'm happy to see that. Alibaba, I've got a 105 by 100 credit spread, and we're trading at 105, and hopefully this will get back to these highs around 123. I closed up some long calls for some profit. Bought the price is trading around 105. I bought like the 115 or 120 long call, closed that for about 150% gain. So pretty happy with that. But now I have credit spreads in. I like the stock. I will take some ownership of Alibaba if I have to, but only for one contract. And then also FXI is another one that's pulled back. And hopefully we'll see some higher lows. Lows here, higher lows. Now, even though there are some lockdowns going in place, we still have the country exercising fiscal and monetary policy accommodation. So I do think that even though this was a down move with COVID lockdowns, I still think the country is going to do what it can to, in the sense, lift animal spirits. That's been the big phrase getting tossed around, right? So I'm still long on some of those Chinese tech plays, but that's about it. Not crazy exposure. And then the rest is U.S. stocks and trading lots of options. Like I said, punted a lot of the timelines out to the end of the year, give the market time to get through the summer. We have a lot to navigate in Forex. Here's the dollar index stretching to new highs. We pulled back a little bit last week, the last couple of days. I still think a correction is long overdue. We have a crazy high bar count on the dollar index with the daily 200 EMA. DXY, same thing. There's the 50 EMA. Here's our 200 EMA. We've stretched this out over 200 bars, which on a daily bar count is pretty darn high. I translate that also into the dollar yen, which is sitting at 360 some bars, which is crazy high and very overbought conditions. Now, again, this could keep going until the middle of August. This could go all the way into the first part of September. There's something about timing and seasonality in this Forex market where we do see some highs and lows. The one concern that I have, the one thing we're trying to navigate, we talk about this a lot in Flex, is potentially preparing for a flash crash high or low. It could be on dollar crosses. It could be on euro dollar to the downside. It could be on all dollar crosses. It could be on JPY pairs. That seems like the most probable at this point because of how strong those trends have been. Usually a flash crash move is when the trend is stubborn, and then it finally busts out of those highs with that big flash crash capitulation move, and then it comes all the way back down to where it's supposed to correct. These actually are fantastic trades if you can stomach or take on that trade if you're already short, right? It's obviously if you're in a trade and you're over leveraged, flash crashes pretty much beat up every retail trader and bust them up, and they get margin calls and crap like that. So I did scale out of some of my trades, took some losses. I'm looking to see if I have to absorb a flash crash. I'm going to get filled on a couple of entries, hopefully near the highs, and then I'll take it back down to the technical levels I've been watching for the last couple of months. So I am prepared for that if it happens. It could actually be a very lucrative situation after the fact, but I'm still going to have to navigate the current positions and drawdowns, make sure things don't get a little out of whack. Currency strength chart, let's check it out. We'll be watching it for the week. Let me refresh this really quickly. Look and see if there's any jumps today. So today we've got the Great British Pound on top. The dollar and the Swiss are weaker, which I'm lovely to see the Swiss franc weaker. Dollar as well. So euro, CAD, pound. This all should be working out pretty nicely for some of my Swiss crosses. So CAD, Swiss. We are long on CAD Swiss. I've stacked in a few orders on this turn. I'm looking to take this up towards 76.50 and 77.50. Euro Swiss turning nicely off the close last week, and now we're at 99.04. I still need to break this trend line, spend some time on the right-hand side of the trend line, and probably clear this parity mark once again. If the Euro Swiss can overtake 1.00, I'm way more bullish in stacking up some trades towards 103.50 and all the way up towards 105. Depending on what happens with the ECB this week, we might have a volatile enough week to see that take place. Pound Swiss. Long on pound Swiss, this is starting to head higher, which is nice, 1700. I'd like to see it break these highs at 1800 and stay above 1800, and then we have levels back up to 22 and 2300. Another one that could be a big longer term trade. We have a medium term range at 22, and if it breaks to go the upside, I am long on pound Swiss all the way to 1.29 and 1.30. What other ones? I've got some Aussie Swiss long. This one's trying to make its way back up. We have some pocket trades at 68.75 and 6900. If I can take it up to 7,000, that'd be ideal. And took some profit last week on dollar Swiss. Took it up here right near the highs around 98.75. And euro dollar, we're sitting just off of parity, 101.34. We had lows last week at parity for the first time in 20 years. And, there's still obviously room that needs to be made up. There's a high. If this is kind of the final move, are we going to have a corrective pattern back up into 108? Past support becomes resistance right around there. There's also an outer trend line. Past support becomes resistance right out here towards 110, 111. I do want to see if the dollar index makes a correction. I do want to see if the euro gets priced in with some strength for the first time since the dollar's been taking all of the strength pretty much this year. It has been a very resilient basket, and they're giving the dollar a lot of credit, like, oh, it's got the strongest interest rates. Well, it actually doesn't when you look at the official cash rates. The Fed is still way behind the curve, but the market knows that the central bank, or for the U.S., the Fed is way more vocal about where it's going to be. And that being said, I mean, it's like all eyes on the Fed for where they're going to be. How many more rate hikes will they have this year? Going into next year, they can continue to tighten, or will they back off? We'll see. It's obviously a very dramatic year for central banks because they're dealing with something they haven't really had to deal with in a long time, which is 40-year high inflation. So we as consumers dealing with it. Is it affecting our life? Yeah, a little bit. Savings are getting tighter. People are spending less money. There is a bit of a contraction. There's certainly tons of worry about a recession, not just in the U.S., but probably globally. So question is, can we navigate a soft-ish landing? We'll find out. And that's why 2022 is going to be the year of the trader. Got to figure it out. Okay. Any requests for me? I was going to look to see if we have some earnings. I'll go to earnings, Whisper. Let's go to the calendar this week and see what we have. So we have Bank of America already printed. We have Goldman Sachs, Charles Schwab, Synchrony Financial, more financials coming out, Duke Realty. Okie dokie. Highlights for tomorrow. Johnson & Johnson, Halliburton, Lockheed Martin, Ally Financial. Still a lot of bank plays. Financials leading the way off of earnings season. Wednesday. I also saw Cleveland Cliffs. Baker Hughes, that's another energy play that we're in. Cleveland Cliffs has earnings this week. First Horizon National. I'm actually looking to lose that stock in August. I've got that thing breaking at like 17. It's trading in the 20s. Berkshire Hills, fancy, not quite Berkshire Hathaway. What else? That's it. Anything else notable? Thursday. There's like 130 some companies reporting earnings this week, maybe more. AT&T, that'll be interesting with their 5+% dividend. FCX, we have some credit spreads running on FCX. That's a nice little copper play. Copper is also a big hint at whether we're going to see a recession or not. We had a huge drop in copper, which followed with a huge drop in oil, which followed in a huge drop in materials and energy prices. Now, is it sustained? Are we going towards, is copper really the leading indicator to a recession, or was it just the dumped position to reset? Maybe. I really am like 50-50 on this stuff. Domino's Pizza. People are still buying pizza. It's cheap. Still tastes good. What else? Huntington Bank shares. I have shares in that. Snapchat. That's Snap-on, not Snapchat. Never mind. Let's see here. Sunoco Energy. Looking for CLF. I know it's in here somewhere. But we've got plenty. We got plenty of earnings this week, so we'll be watching. I'm not doing a lot of like spreads and straddles. I'm not doing iron butterflies. Like I'm just trading credit spreads and kicking it out for the next couple of months. There will be some earnings. I'm just curious what the overall sentiment is. I do want to see Delta this week. I'm going to put on a new credit spread and take a look. So Delta's trading at 30.85. I need to issue another covered call. I'll probably do another 31.50 this morning while the market opens and equities on demand class at 10 o'clock. I covered it last week and lowered the cost. So actually, if that's the case, because did I do that? If I did that, great, because I'm already set. 31.50 would be my covered call, and it's out to this Friday. We have a credit spread out to the end of the month, 31 by 30, which would be fine. So if I can get this stock called away, for a couple bucks, and then have a credit spread that pays as well, that'd be a nice little chunk of profit. I still like this area to buy support on Delta. I'll probably put out a couple more credit spreads out to the end of the year and see if it goes down. I'll own some more and own it cheaper. If it goes up, we'll generate some income. So I like that one. Daniel, is that you asking about the dollar yen? I think you asked me on Friday. So guess what? My thoughts aren't really any different. 138.28. The BOJ coming out on a Wednesday evening to Thursday's trading day. Are they going to say anything different that suggests they're watching this 140 handle? I know we've talked about it in Flex from 140 to 150. If this is the area that the BOJ is willing to look at some intervention, again, I don't hold my breath on stuff like that because we could have a flash move up to 150 and then a complete rebalancing. I will say this, regardless of what the Bank of Japan does, there's going to be volatility on the Japanese yen pairs. Regardless of what the BOJ says, I mean, unless they say like we're going to start raising rates and there's a huge repricing, which I don't think they're going to say that. I think what they're going to do is try to let the market forces play out as they do, and they'll just stay with a very simple narrative and very consistent narrative, right? But if this just goes higher, 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 I am telling you this from a technical side, this could be a very painful trade to the upside if you're short. I am short dollar yen. Okay, my break even on dollar yen is like 135. It's not that far away, but could I stomach another 1,000 pips to the upside? I'm prepared for it because I've been taking losses over here. But my technical target on the dollar yen is this 200 exponential moving average. And the fact that we have distance now away from the 50 and a lot of distance away from the 200, I know this could stretch. I looked at this from a potential rising wedge like so. If this structure breaks, I am going to start stacking some sell trades going back down to this low around 127 and this 200 EMA. That is my technical target as a seller on this currency. All right. Now, that doesn't mean that I'm aggressive right now, because if this is going to still stay stubborn and go higher, it's making higher lows, and it's still making higher lows. So I have to scale my trade sizes out. I'm tearing out for some small losses, and I will add back in. I have a 140, 145, and a 150. I have those sell trades already stacked in, ready to go. If they're needed, it's kind of my contingency plan in case we have a flash move and then I can come get back and get the rebalance. But like I said, my technical target as a seller, and this from a wave count, this from pivots, this from pockets, this from overbought conditions, is as technically as good as I can find for an overbought move looking for a rebalancing. And to me, that rebalances the 200 EMA and look back at this previous low, which is around 127. So whether we go up first and then fall back down, or we just start rolling sideways and then falling down, or we just go sideways the entire time for 3 months and this thing can just catch up, this EMA will get hit, right? And I hope it's, a little bit more of a cooperative move, like we're going to have some repricing. The dollar gets weaker, euro dollar pops up, pound dollar pops up. Let's see some dollar weakness in the dollar basket. It makes sense technically. So it's not just dollar yen that's overbought. The entire dollar index is overbought. So that's what I'm looking for technically. Okay. So you're short right now at 55 pips, looking for 133. Fantastic. Good. Like I said, I can double check my break even, but I'm pretty sure since I took some losses, I moved my break even up to like 134 or 135. And I'm going to keep it there. I'm just going to keep it there for now. I've got a 140, 145, and 150 stacked in, ready to go if needed. But my alignment is if we break below this 50 period, I expect it to go down to the 200 period. And so it's break, retest, go. Break, consolidation, go. Break, retest the high, go. Something where it just has to cooperate with some price action. It seems like it's been a technically broken currency for the last little bit. We've gone up 3+ thousand pips, 103 to 140. That's a big move. 3,600 pips with nothing but this tiny little pullback here for about 3 to 400 pips. That's not a lot. So this is one of the largest moves we've seen in the dollar yen in probably 10 years. And again, I'm trying to let the technicals work themselves out, trying to obey the technicals and make sure that I'm not taking crazy pills. Okay, pound yen. Pound yen's pretty choppy. I don't love it. Pound yen, just be careful. Watch these highs. So, like I keep saying, watch these lows, watch these highs. I'm encouraging traders to be way more short-term oriented on some of these yen crosses because pound yen, for example, lots of volatility. We come up to the same high, look for resistance, look for resistance, look for resistance. It's probably a good spot to sell high if you're at 168, 169 again. But for right now at 165, we could have some short-term bullishness that gets us right back up to those highs at 168. So follow your alignments in the shorter term. If you hit these highs, start looking for confirmation to sell it back down. Range lows, previous lows, previous lows. And I think we're going to be range bound. You know, there's no immediate structural changes in a lot of these summer trades. So if this is resistance here, this is support, you sell resistance, you buy support. Okay. Pound US dollar. Now everyone's coming through with requests. Pound dollar 119.84. I think if we can recapture 1.20, this to me looks like a very promising falling wedge. Okay, so what I'd like to see is price spending some time on the right-hand side of this trend line, break and pause and go. Break and retest and go. Right? I want to see this pound dollar get all the way back to this high around 126. Again, that is a pretty textbook way to trade a falling wedge. So if we break that structure, great. That's what I'm looking for. Price out here, break, pause, go, break, retest, go, but the finish line will be right up here towards that 126. We might spike up a little bit higher into this pocket around 127 or so. But like I said, if we get to 126, I'm taking profit. I've scaled in a couple of orders already. I think I'm in 5 or 6 positions on pound US dollar. If we get to 126, I'm definitely taking profit. My break even's right around 1.20. Okay. Good stuff. So again, currency strength chart for the day. Pound is leading the way. Happy to see that for the first time in a while, actually. And dollar Swiss, two of the more like strengthy current. That's not even a word. Two of the strongest currencies we've seen in the last couple of months, like resiliently strong, stubbornly strong. If we can start to see a little bit of a shift right now in dollar and Swiss and staying weaker, I'm certainly going to welcome that from the technical side. I do like Swiss weakness. I do like dollar weakness, and I'm looking for that technically. Now, the yen is kind of the wild card because right now with the dollar and the Swiss weaker, the yen is still considered a safe haven currency pair. So does it also join the ranks with the other safe havens and still stay weak alongside the dollar and the Swiss? It's very possible. Okay, so that's why I say just keep watching for the short-term alignments with his yen crosses. The BOJ will have some comments this week. We'll see what that does to price action. You know, if this legend right here, the JPY, is like all of a sudden super weak because the BOJ says so, then we're in for some more drama. And it's probably going to be like an ugly transition in August if the BOJ comes in and says they're willing to intervene at some level. And I don't know what that is. And I don't even know what currency pair it is. But if they intervene, it's going to be the entire basket that's affected by it. If they say nothing, then the BOJ probably stays weaker. So we'll have to, again, carefully navigate that. We'll be tiptoeing around those JPY pairs, right? Hopefully we see some dollar weakness that's pretty consistent. Hopefully see some Swiss franc strength that's pretty consistent. And technically some really good alignments to make some money on those. All right. Any questions? I'm going to jump into my stock platform. I'm going to take a look at my notes and probably start adding some covered calls to some stocks that I can. And Equities on Demand students, I'll see you at the top of the hour at 10 a.m. If you have any other requests, I'll give you like one more minute. Otherwise, little introduction. Look, it's going to be a busy week. We have a lot of earnings. Banks, like I said, we're not super sour. We expected like terrible earnings. Even what I saw last week, reading up on Morning Brew and reading up on Stock Twits day after day, a lot of the earnings reports weren't bad. Airlines were actually decent, even though they are canceling flights like crazy. They don't have enough pilots, but yet there's still high demand. So again, what we're counterbalancing here in the market is this isn't a demand issue. This is a supply issue. Okay? Are we going to see a supply issue that gets fixed? Are we going to see supply chains get fixed? Are we going to fix the semiconductor stuff? Are we going to fix agriculture stuff? Are we going to fix material things? I don't know. China has a lot to do with that. But is it all on China? Not necessarily. If you want to check out some good information over this week, I would encourage you to take a look at this podcast. This is right here. So in Search of Green Marbles, there was I'll give you the episode. One of them was really political over the weekend. I was on a road trip. I went to Indiana this weekend, and shout out to Pulver Psych for the 3-on-3 dub at the Summer Sizzler, little undefeated championship. So this is what I was gonna say for the podcast. I'm looking for the episodes. Man, there's 2 episodes. One of them, I think it's this one right here. Guns and Butter. It was with Mike Edwards. So I'll post this in the chat. This is a great podcast. This is Weiss Capital Management, Jordy Visser, Lundy Wright, Mike Edwards. G3 is the podcast host. They do a great job. So that's the website right there. But this episode here, July 8th, Guns and Butter, Policy Aspirations Constrained by New Realities. That's a really good one with Mike Edwards. And then the other one was very political. This one was also with Mike Edwards, who is like, he knows a ton about China and all the intricacies and nuances of politics. And so this one got a little political, which again is fine because it makes a lot of sense with what's going to happen, midterms and Democrats, Republicans, what they can do optic wise. But I was more interested in the bigger picture, the macro China. So this one here, Guns and Butter, is a good one. So check it out. It's good information, just like anything else. So it's interesting. And yeah, look forward to trading with everybody this week. So equities on demand, Monday through Friday. Flex for Forex Tuesday, Wednesday, Thursday. If anybody is here checking this out for the first time and you want to get a free trade alert, you can join my newsletter, pulverreport.com. Click on the newsletter here. I send it out every, it's either Monday at like 4 or 5 p.m. or it's Tuesday morning first thing. Whatever. It goes out, but I do the picks today. Like I'll do a video and I'll post it and the team sends it out later in the day. Also, if you're interested in checking out any systems, any strategies, got a ton of stuff in here. My trading rooms. If you'd like to trade with me live through the week, click on systems, click on trading rooms. Flex trading room is Forex focused. We trade Tuesday, Wednesday, Thursday live. And of course, we set up trades for the entire week. It's a 24/7 market, right? Or 24/5.5 market. So we trade Forex. We set pending orders. We have directions predetermined. Equities on demand, trading stocks and options. We're running our entire portfolio every single week, reviewing. Maintenance is pretty high, but again, learning curve is once you're understanding the core strategies, we're making some really consistent income in equities on demand, and we are very agile with our portfolio, which in this environment is perfect. Okay, so if you want to trial those, I give away a $27 trial for each month for the Flex and the equities on demand for your first month. And then if you want to stay with me, then stay with me. There's monthly, there's annual subscriptions if interested. You can trade live with me. Cool beans? All right. Thanks, everybody. Have a great week. I'll see you all this week in the trading rooms and be back here on Friday for the YouTube channel to wrap things up. Okay, if you do me a favor, for everyone watching, if you click that thumbs up button for me really quickly before you go, that helps the channel out, get that saturated algorithm where people watch, people click the thumbs up button. That's engagement that we need. And thanks for watching. Thanks for being here. See you on Friday. Okay, take care. Bye.